All right, so thanks for joining me today. We're going to take a look at speculative stocks. Remember, speculative stocks are those that don't have a great risk to reward ratio in terms of consistency, but they have a good payout. So when we're looking at these speculative stocks, and let's say you're doing 20 of them, and you put in 500 bucks on each one, you may get a return of 20 times, but you may lose on like 19 of them, and you win on one. But that makes up the huge difference of losses on all the other ones that you lost on. It's not like a Microsoft that's as consistent. So in this video, I'm going to share with you over the next maybe year stocks to watch out for that are a little bit more speculative. And it's not like a regular Microsoft or maybe AMD these days, or maybe a Goldman Sachs or a Bank of America. It's more speculative. So there is a little bit of higher risk. So if you've got a $100,000 account, maybe you only put in 500 or 1,000 bucks into one of these. But again, you got to do your own due diligence, understand the risks that are involved because they can be risky. So understand what's going on and what's happening. So let's get started. We're going to take a look at those. If you do want to learn a little bit more about option trading, check out my option trading YouTube channel there at Traders Fly, and you can see much more regarding options. You can also go to Traders Fly, and there's a lot of classes here that I do regarding option trading and much more specific to trading actively, and also the Discord channel, which you can find in the link in the description right there below. Okay, so let's get started. I'm going to share with you some of these stocks here. We're going to start out with some of these right here from the top. SoFi. SoFi is a personal finance company. If we take a look at the year to date, the stock's been going down. It is cheap. Like, look at these. A lot of stocks that are speculative are going to be cheap. That's just the nature of them. If you look at the year there, you can see the stock reached about 20, 25 bucks a share or so, and we kind of created this double top. So when we really look at it, we've got kind of this double top problem right here. Stock got into that, sold off, and continues to sell off since about November time. So if you're looking to kind of pile in, let's say 500, 1,000 bucks, 200 bucks, this could be a nice, interesting point there to start checking it out. So here is SoFi. Looking at it, here it is at the $8 mark. A big concern for me on this stock, I will mention, is it did break the $10 mark, and stocks that do break the $10 level, usually that is a bit of a problem, because what happens is if you break this $10 price point, now the stock is in a whole different range or category. We also had kind of a double to triple top here if you're looking at the overall chart. So if we get back above 10, you're probably going to be in this sideways consolidation price pattern for a little while. So just be aware of that. But it is one that's a bit more speculative, that, hey, if we do get from this $8 mark, get back even into the $15 range, which I think is much more likely or possible at first, then that is something that, you know, is still going to pretty much double up your money. Oftentimes when you're looking at speculative stocks, you're looking at return maybe 5 times, 10 times. In this case, when you're looking at it, you know, I'd say realistically, you could look at a 2 times, maybe a 3 times return here in this one. It's not one of those like a 20 times return, but, you know, looking at the stock price, it is fairly cheap. If you're looking at a 5 or 10-year horizon, that's when you can maybe look at a 10 or 20 x return. So anyways, check out SoFi. It's kind of interesting right there. But again, remember, these are speculative, and I will keep reminding you on that. It's not one that you should put in the bulk of your investments. Roblox is another one, also speculative, not the bulk of your investments. And this is basically a video game company. You have a lot of in-app purchases and that kind of thing. My son plays it periodically. We only allow game time on the weekends, but he does like to hop in on there. Sometimes he also plays like old school Nintendo. But this is one that, you know, it's been tanking for a little while, but it did get into that price of about $120 a share. If you check it out here, RBLX, you can see we got into that high share price was around 140. You know, we had a IPO recent, so broke down to 60. This was a huge problem for that stock. So we had support level, a huge break, continues to go lower. 40 tried to hold, continues to go down lower. So now we don't know where it's going to go. So look for a possible base somewhere soon. I don't know if it's going to be here or maybe around the 30 or maybe even lower than that. It could be around the 20. If we can get a base and then a return retracement, that's kind of what you might be looking for. I wouldn't pile in it right immediately, but keep one on your watch list, right? Because right now it's still going down, it's still tanking. And if we start turning or reversing course, that's maybe one that you might want to say, hey, this is a cool one to have later on in the future. So I would say in terms of the metaverse, this is actually pretty close to what the metaverse is all about. And if you really look at Roblox and just look at just the images, this is kind of what the world of the metaverse, I think, is really aiming for. You're kind of walking around on the gameplay, and I've seen a couple times. You're just kind of playing around, and you could do in-app purchases, but you can see there it is. It's kind of like a virtual world of. It's what the kids are doing, but I guess later on, if you do this for meetings and that kind of thing, that could be bigger in terms of the meta platforms or Facebook. All right, let's check out DKNG is another one that you could take a look at. This is DraftKings gambling, sports fantasy type thing. And I had this one, I traded this one fairly actively for not a long-term investment, but, or not even a speculative, just active trading on vertical spreads in the past. And if you look at this, we've had kind of like a head and shoulders here, and the stock then continues to head lower. From about 2020, this is kind of coming back into those lower levels. If, you know, in California, they start opening up some more of the gaming laws, that could play into the stock. But what I like about this one here is that, you know, we're coming back into this value of, again, that $10 range. We're still not there yet. We're near that $15 price point, and it's starting to get there. But if you look right here, we've got kind of these right there, head and shoulders areas right there that was being created, and then we had that sell-off. So now we're getting into this $15 price range. Also a nice round number, sweet spot, usually for a lot of stocks. And then what you can see is we may try to bounce right here. We will see if that happens. We tried to hold and play around that $20 price point, but we weren't able to really hold that price level too well. Definitely, I would say, look, watch out for the 10 if we keep selling off. That is quite a bit from where we're at right now, because it's a pretty significant pullback. And that is about 35% lower than where we're at. But if you can find a little bit of a base here at 15, I think this one could play out fairly well. Again, it's not rounding yet. It's not creating a base. We're not seeing light yet, but it's, you know, it's one to keep an eye on, because there was a lot of money piling into this one before, and you can see how quick that explosive growth can actually be. It can be very quick and fast. So even in just a few months, it can make it up. So you don't know when those things will move. Okay, Hood is another one to watch. I'm not a huge fan of the trading company itself. I don't really like it, and that's because from a trading perspective, I know they the order flow and the way that they make their money is not really a benefit to the users. But from a company standpoint, people love the stock, which means if they love it, they'll pile into it, even though it's not in their best interest. And also they could be making money because they have a lot of like the YouTubers, influencers, oftentimes that pump Robinhood because they get a cut in commission. Me personally, you know, basically, in other words, at least in the past, I haven't looked into it recently, but they have been ripping off, you know, the order flow, and that's how they make their money, right? So if you buy a stock, let's say for $125 on one platform, Robinhood will charge you, because they order flow, they'll charge you 126. Even if you put a limit price, if you put a limit price in, you're going to say, well, why don't I put a limit price? Well, if you put a limit price in and you say, well, I'll buy it for 125, well, at the other platform, you would have gotten it at 124. Robinhood won't even fill you till 125. Anyway, long story short, they really make more money on that order flow. At least they used to. Now, maybe things have changed, but there was a lot of backlash. Anyways, I think this stock could do well if you want to do look up the Robinhood lawsuit stuff. You could take a look at it more in detail. Settles lawsuit. There's trader who dies. There's after GameStop trade halting. So anyways, there's just a lot of problems there in terms of the trading, but they do have a lot of push and influence there overall. So I think they could be a nice speculative stock from a, hey, this could push things into higher prices, because they got a lot of people trading on the platforms, which aren't oftentimes you know, very super active traders, but this is where the push can come. So anyway, looking at this stock, and I've taken some nibbles and shots here, you're coming right into a $10 range. This is what's kind of catching my eye regarding the stock, is that it could actually be oversold, and this is where it could bounce. So we're already hitting once, twice, three times here, and where we could get a little pop. I'm not saying we're going to get an explosive pop to like, $500 a share, but hey, it could pop to 15, it could pop to 20, and this explosive move right here, a 42% move, could get back into the $15 price range. I don't know. I'm just saying from a speculative perspective, it seems to be attractive from that end. Again, speculative should be used with less money, less capital, not anything huge or heavy, but taking a chance with some chips or nibbles or a few dollars. Yeah, this is kind of an interesting point. You're right at a $10 range. Stock's been selling off for quite a long time. Maybe in the next year, you could get a cool pop. Anyway, let's check out another one, Neo. This one, a lot of people flock into it. There's a lot of news regarding it. They're kind of talking a lot about it from hey, it's hot, it's hot. There's a lot of space in the social media space. Yeah, it could be there. There's a couple of these car related automotive stuff that's going on. You have to recognize these kinds of things. However, for me, it's not one I would jump into personally as a speculative stock. I prefer speculation at a different way. The other thing here, as I'm looking into it, is there's a kind of a gap here. So I think this gap could actually come back and fill. So I don't think it's ready yet, but I think it could be one later on, maybe in a 5-year time frame. Because right now, all the chart indications to me is kind of negative, and it's actually picking up some speed on the negativity side. So I think it is still one that's probably overvalued for the shorter term right now. For me personally, if I was to take a shot, I'd probably put on like a bullish butterfly into these types of things. So this isn't the way I would trade speculation. I would rather put on shorter duration option trades or that kind of thing for speculative bets on maybe stuff like a Microsoft. And that's, I think, more speculative in my mind because you're doing shorter duration. But if you're looking for stock specific, then in that case, you could keep an eye on something like this. This is one, some people like to check out and Neo, and they buy into the story, and that's fine. But for me, it's not my cup of tea, but I just will mention it because a lot of people do have it on their list. Another one here, just as a bonus, Plug is another one that people are kind of watching. What you'll want to watch with Plug is kind of a little bit here that we've got here. They got downward channel. You got some this upward. The problem is it could sell off a bit. But if we do get kind of this base right here, you could actually just start trending to the upside. So anyway, you've got some interesting things here going on with Plug, also kind of electronic components, and here's a support level. So that's just kind of like a bonus. We're kind of right also at around the $20 price point, and it's just another one to kind of keep an eye on. So those are kind of the big ones. Here, I'll give you another bonus one that I have here on the list. ChargePoint Holdings, so CHPT. We'll pull it up and just give you an idea. Electric vehicle infrastructure. So again, similar to this EV kind of companies, people are getting into that. A lot of that is probably because of the Tesla stuff. People are into the Tesla and they're trying to find another hot stock like Tesla. I don't know if you will get it, but I'm just showing you a couple of other ideas here for you if you're interested in there. So there you go. Those are kind of my thoughts and ideas regarding some of these speculative stocks here in this next month in April, or even in the next year, because these speculative plays may not pan out for the next couple months. It may take, and then what you're looking for is, hey, there's a big flood of news that comes in and then pushes it and pumps it, and it goes explosive, and that's where some of these moves can have some parabolic moves in the future. But again, speculative. They're speculative, so that means don't put all your money into these things. If you got 100% of your cash in these, that could be a real burn and disaster. So maybe like less than 1%, 1%, 2%. You determine what the risk is there, but don't put all your money in there. A lot of times, a good way to play that is also let's just say you have $5,000 allocated for your speculative portfolio, and maybe you got 100 grand in total, and you got 5,000 to speculative. Spread your money into maybe $500 here across 5 or 10 different speculative stocks, and then that kind of diversifies your risk. And if one makes it, then you pretty much make your money back from the losses of maybe all the other ones, and so on. So anyway, that's the way I like to look at it and approach it from that angle. Anyway, thanks for joining me. Enjoy the rest of the week ahead. I will see you in the next video and episode. Don't forget to subscribe, check out the freebies, the website, or if you're into trading options, check out the Traders Fly YouTube channel. Thanks. I'll see you next time.